Well, for more on overseas markets, we're joined now by Ashraf Laidi. He's Chief Executive Officer at Intermarket Strategy, and he joins us from London. Ashraf, it's good to see you again. I'm dying to hear your views on the Brexit referendum and vote that you and the UK are now headed towards, and what effect will this have on the currency? We've seen some weakness in the pound. Mark Carney has addressed that subject today, I believe. Will we continue to see weakness in the pound as this thing moves forward?
Yes. Hi, morning, Paul. The short answer is yes, but the British pound did not need the Brexit uncertainty to start to fall. We've been bearish on the pound for the clients since late September, just before the BOE started to aggressively downgrade the inflation, GDP growth. You know, the British pound was one of the currencies that had, in a way, that was expected, along with the Fed, with the dollar, to see its central bank raise rates. So there were hopes for the pound to rise. These hopes were founded on wage earnings to go by more than 3%. Now they are less than 2%. So the BOE aggressively downgraded all of this, and you know, the GDP growth, the CPI, and sterling fell across the board. Then we also had the Brexit in the back of our mind when we sold the British pound. And Boris Johnson comes in, puts a bombshell. If you speak to people here in London, they'll say, well, it was expected. Boris Johnson, the mayor of London, is just coming in with this aspirations to become the prime minister and so on and so forth. But, you know, people may say it's not about those who want to leave. It's not about it's not about economics. It's about the immigration. We could sit here and talk all day. What I think is that even if I do think that ultimately the vote would be to stay, but that does not matter. It is the path to June the 23rd that is going to really lead to further declines in the British pound. And one very important thing, the UK has a current account deficit of 5% of GDP. The country does not need to stem the uncertainty for capital flows to leave the country, but it has to keep it in, and that's why the British pound is expected to fall across the board.
Okay, Ashraf, just let's move to crude oil, because we know UK has a lot of major oil companies, and obviously they've been hurt with declining oil prices. And I know your thoughts are that we've seen this brief rally of crude, but you do expect it to pull back into the 20s. What do you think is required for a sustainable move up in crude?
Yes, Christine. Well, I think probably the answer is in Houston. You have the #2 in the Federal Reserve, Stanley Fischer, in the same conference with Ali Naimi, the head of OPEC. They could solve the problems of the world. You know, they could right there. Let's be real here. When you say we're going to freeze output, that's not enough, because output exceeds the demand. So it needs more. What is more? For Saudi Arabia has to raise output, would be undermined by Iran. Iran is going to increase output. That's not going to happen. I think that probably oil, U.S. crude is going to be capped around 35, Brent around 37. I think we could probably come back down. The interest rate reset for the struggling oil companies in April, that's not going to be a good thing. Last time we were in the show when oil was at 13-year low, we're around 32. We said it's going to go towards a 25 and not to 37. So we went to 26, and I think we could probably rebound in a short-lived manner and then come back down. And so I think the dynamics is still quite bearish for crude.
What do you think the comments of the Saudi oil minister in Houston today, what do you think markets will want to hear? Will he say anything that we don't already know? And do you expect some short-term volatility in the commodity based on his comments today?
If stocks are going to continue to go up along with oil, and if that's what markets want to hear, is that Al Naimi should probably say something along the lines, we are getting closer to a workable agreement with OPEC and non-OPEC members, and we spoke with the producers, with the struggling wildcatters, and we're going to reach a deal, and we're going to hold hands, and we're going to talk along and let bygone be bygone. That's probably what's going to happen. It only takes a tweet or two in the market to rally, but the realities of the market, when the Saudis go back to Saudi Arabia, and they're next to Iran, and they're next to a world awash with oil. This is what counts. And actually, with the question regarding the FTSE and the UK, many people said cheap oil is good for the world economy and everything, and for the UK. The FTSE is definitely largely influenced by miners, by commodities, and by oil companies, and we expect it to actually to come further down. And that's why our view is for equity markets to have a nice rally going into the Fed around St. Patty's Day. That's where probably we could expect a top, and we could come back down another 10 to 15%.
Ashraf, you indicated that you continue to be quite bearish on the pound. What are your thoughts about the Canadian dollar? How is it linked to the energy prices as well?
Yes, I mean, we're still short the sterling versus the Canadian dollar. We're still short the Canadian versus the yen. That means we're still short sterling versus the yen. It's very interesting. You guys know better this than us that Polos, the head of the central bank there, is probably, quite calm regarding the fallout. The job reports from Canada are not that bad regarding the decline in oil. I think that we could probably, I think that the worst may be over for the Canadian dollar, unless we have any bad surprises from banks, from the housing sector, which has been expected by many hedge funds to fall, to be damaged, and that did not happen. Maybe because they use the money in their pocket when they buy houses, but unlike in the US, but that may change. So I think that we would probably prefer the sterling we would prefer the Canadian to the sterling, but like the yen to the Canadian.
Ashraf, thanks as always. Have a good day.
Thank you.
Ashraf Laidi is Chief Executive Officer at Intermarket Strategy, and he joined us from London.